What up, guys, and welcome to the coffee shop. This is your host, Bristo, and I'm back with another free indicator that is actually going to put me on the map for beginning to use Bollinger bands all over again. I'm going to tell you, when I got started trading, I hated Bollinger bands. I failed with it so bad left and right. It was the same thing for me when I was using a stochastic RSI, and I went into the lab. I went deep into the code and I created a new version of the stochastic called the Stochashi, which you guys can get. You'll see it on my profile in TradingView. And it is just now an ultimate tool that a lot of people use as well, a better version of the stochastic. So this indicator called the zero lag multi-timeframe moving average. It's a really long name for a very easy thing to use. This indicator is good for people who like using support and resistance from moving averages, if you like using Bollinger bands, and if you very, very much need to see multi-time frame analysis, right? But you do not have access to like all of these extra chart layouts, so you can put multiple charts, on your screen. So some people they'll put a 5-minute chart here, they'll put a 30-minute chart here, and then they'll put a daily chart over here. Like, you can do that if you are using something like this 3-screen split right here, right? Or one of these 3-screen splits. Like, you could do that. But for people who have free accounts with TradingView, you cannot do that until now. I'm not giving you a multi-chart layout, but what I'm giving you is the ability to see multi-time frame in perfect lockstep with current time frame. So let me show you what that means, for example, right? Let me just kind of shut this high time frame off for a second, and we'll cut the chart back to here, okay? Just kind of do that, right? So there's a problem with using the chart time frame setting that comes from TradingView. And by the way, the base code for this indicator, I have to say, is provided by TradingView, but I was able to elaborate on it to great detail, and it really, really kind of beefed it up. I hope it becomes a staple use item with TradingView indicators for a lot of people. So let's just look for, let's see, SMA, right? The simple moving average, or moving average simple, right? So the common one from TradingView, I'm going to set it for a 50 period, okay? And I want to look at the 30-minute chart, right? I want to see the 30-minute chart. Or better yet, let's go to the 4-hour chart, right? We'll do that. Now, very easy to see what the problem is. My current time frame moving average, which is a 50-period moving average, it's right there, okay? And I can see the activity. But the 4-hour moving average, it's way back here, right? And there's going to be times where I need to know where is the price. When price action is down here near that moving average, I need to know whether it's interacting with that moving average and which way is that moving average moving. Like, is it moving up? Is it moving down? Where is it creating support and resistance? And if the moving average, which is already lagging, if now it's lagging behind even further by a couple of dozen candles, look, it's still not moving. I'm just kind of skipping forward a little bit. You can see the moving average is not there yet, not yet, not yet. So you can see what's happening, right? My price is falling, right? I want to know where's the new value of this moving average, and I still don't have it. Still trying to get it. So this is the problem. You're not getting real-time values of high time frame. So I created a system that allows you to see real time, right? So let me just turn the high time frame back on, right? And I can set it for 4-hour if you like. 4-hour is going to be how many minutes is 4 hours, right? 60. It's 240, right? 240 minutes. There we go. And then here. So now you can see the moving average for the 4-hour is right there, and it's in perfect sync with the current moving average. They're right there in the same position as each other, and they always will be, okay? So you can always see when your current time frame is interacting with your high time frame. Now for the purpose of this video, let me switch this down to a 30-minute, okay? And then I'll show you the accuracy of this, right? So a lot of people try and switch between time frames so that they can see what's happening in the market, right? So let's just kind of do this, right? This is telling me that the high time frame moving average is here. This is a 50 period 30-minute moving average. That's what that's telling me, okay? And this is a 50-period 5-minute moving average, right? This is a 5-minute chart. So let me just now turn off the high time frame, right? Turned it off. You can't see it. It's no longer there. Now, if I simply change my chart to a 30-minute chart, this green line, this green moving average, which is the current one, is going to be pretty much right there, okay? So let me just go to the 30-minute, right there. And now you can see the accuracy. I can't draw it perfectly, but yeah, it's there, right? You can see that the two moving averages are calculating as close as possible, as close as they possibly can, right? So that's the purpose of doing this. So now, what's the benefit of having the access to two moving averages at the same time? Well, let's take a look. For example, why do you have rejections here? Okay. Also, if you're trading and you're using moving averages as support and resistance, then you also want to know what direction they're moving in, right? So, for example, if price is, I'm sorry, here, clear my throat. If price is falling below the current moving average, you want to see if the high time frame moving average, you want to see if that moving average is falling down. You don't want the high time frame moving average falling up, like rising up. You don't want it to be doing that. You also don't want it to be in your way, right? You don't want it to be in your way somewhere. And you have to assume like it's somewhere. So instead of constantly switching back and forth between chart timeframes, you can simply use the indicator and it'll show you exactly where that moving average is. So here's the high time frame. So now you can see that you broke below the high time frame moving average. So you broke the average. People would start taking shorts. And at this point, you could say, okay, I am a moving average support and resistance trader. So I know that my support level is going to be the moving average, right? I'm only going to trade to that point. And you don't get a close below it. Not necessarily. You get a close a little below. You're still ranging. This would be considered ranging market, right? Because you're in between your averages. You don't have a new short trend until you're here. And you don't have strength in that trend until here, right? You don't have strength in the high time frame until here. Then you need strength in the low time frame, which is like when it starts moving down, you're starting to get strength in the low time frame. Why do I say that? Because the high time frame average starts to fall here. The low time frame average starts to fall here. There you go. That's it, right? So, and there's probably another average like down here. Maybe the 200 is down here, something like that. It bounces up and then, cascades through both of them. So maybe there's another moving average that's showing up right here. Possibly, I don't have to draw it out, but you know what? Out of curiosity, let's take a look, right? Let's go for the, let's go for the 4 hour again and see where that is. Right there. Nope, it's not the 4 hour. Let's go to the 1 hour. Just out of curiosity. I want to know. 30-minute? Nope. Okay. 2 hour? Seems to be. There you go. That's it. So you can see how price interacts with the 2 hour moving average, right? Over and over again. That's why you get this big cascading movement down, and your 2 hour moving average is down here, where price ends up stopping over and over again and finally breaks through it again. So let's go back to the 30-minute, just because I'm using that for this video. There we go. So now this is beginning to paint a very clear picture as to why you should be using multi-time frame moving averages, right? So you see price ends up breaking down and it hits the moving average. So you're waiting for breaks below it with new price action below this to actually catch downtrends. But you wouldn't be looking for shorts yet, right? Why wouldn't you be looking for shorts? Because your high time frame average is still rising. You're simply looking for long moves again. All through here, high time frame is rising, rising, rising. You're only looking for rejections of this level, right? And then you want to see closes above it, moving upwards. That's what you want to see, right? And then you can see how it starts to dip a little bit and starts to cascade down the other way. So now without this, you would never know, why am I getting rejections? Why is price falling and then stopping? Like, why is it falling and then stopping? Keeps going higher. I'm getting divergences. I probably have a divergence between these two. I probably have a divergence between these two. I get it guaranteed. I can guarantee there's a divergence here. There's no question about it, right? Let's see. So you have an RSI divergence here. You actually got a bunch of them right here, right? Nice set of higher highs, lower lows. And what'd you do? At this point, you broke below your moving average, and your RSI is below into that bearish zone. This is another indicator I created. RSI is in that bearish zone, so you start taking shorts, and you can only get down to that moving average that's down there, right? So that moving average is your support and resistance, okay? And it's just another way to use this, right? So here we go. So this paints a clear picture of why are you starting to get rejections, right? Price action starts falling, gives you rejections of these levels, and now you know what's causing that. The other thing is it'll also show you why you're getting just a lot of choppiness taking place. Both of your moving averages are intersecting with each other. Your high time frame and your low time frame are intersecting with each other. Now, the really cool thing here is you can set this for moving averages, or you can set this for, this is for you Bollinger Band people that like using that. So you have to put on your Bollinger Band, right? And you would have to set this for, instead of none, you would have to set it for Bollinger Bands. So you can set the smoothing value for an SMA, right? Bollinger Bands, EMAs, you can set it for whatever you want. Now I'm gonna set it for Bollinger Bands, and then I'm just gonna turn off the high time frame again, and I wanna show you something here. We already see that there's too much chop here. That's fine. Why is price having such a hard time breaking away from this, right? The moving average is there. It's breaking below and getting out of the bands, but it keeps pulling right back in, right? Comes out, pulls right back in. And it's just a lot of choppiness in this area. Well, what's going on there? Well, if you look at the high time frame, all right, show the high time frame average, show the high time frame Bollinger Band, okay? Where is that Bollinger Band? This is a 30-minute chart Bollinger Band with 50-period moving average. So you can see that both of the Bollinger Bands have intersected each other. One is the inside of the other, which means there's a lot of support and resistance in this area. And it's not until they start breaking away from each other that, that you end up getting away from that choppiness. So you get to see that, here it is again. What's the benefit of having high time frame? Price breaks below the Bollinger Band. People start taking shorts. They want to recover this fair value gap here. Maybe they want to recover that fair value gap here, right? Maybe they're looking at this for a target. It's possible. You could do that. There's a fair value gap here, okay? And you would look at that, but then you'd say, hey, price never made it to this level. Why did it never make it to that level? Because your Bollinger Band on your high time frame is right there, okay? And you would be able to see that. You wouldn't be trading shorts below this. You wouldn't be trading shorts below a high time frame Bollinger Band unless your current time frame was broken and falling, and then everything else starts falling. You got divergences. So you have strategies you can use to be able to get into that. But for your people who like using Bollinger Bands, this is also going to help you out as well. You can see you get rejections at this level, right? Nice move up. It never reaches the high. Doesn't get there. Ends up hitting the Bollinger Band and then getting caught into the chop. And you can just look backwards over and over again on the chart and just see this all over the place. All these rejections taking place at the high time frame Bollinger Band. Now, how do you work this indicator? I don't think I need to get into that with you guys. I really don't think I need to tell you. Like, you can turn on the SMA, right? And you can use just the current time frame if you want, and you can set it for an SMA. I'm looking at a smooth moving average. So this is the smoothed version of the moving average. So your moving average is here, right? And then you could smooth that moving average with an SMA or an EMA, right? Or you can smooth it with a volume weighted moving average. You can do whatever you want with it, right? And then of course you get your deviation bands for your Bollinger if you like. And then the interesting thing here is you got to make sure you set up your high time frame, right? So all you're doing is just asking you, hey, what is the chart time frame that you're looking at? Okay, I'm looking at a 5-minute chart. What is the high time frame that you want to look at? What do you want to see on your chart? I want to know what's happening on a 30-minute. Okay, great. Now, what if I was on a, I don't know, if I'm on a 3-minute chart and I want to know the, how about a 17-minute, right, high time frame? So I want to know the moving average on a 17-minute chart, and I want to look at a 3-minute chart. Okay, great. And I'm looking at a 50-period moving average, right? So I'm going to go to a 3-minute chart, and this is where we are. This is exactly what's happening. And you can see how price interacts with the high time frame moving average again, right? You see it over and over again. They intersect with each other. You get a crossover, nice uptrend taking place, right? You see how they interact with each other over and over and over again. Now, what I ended up doing is I ended up picking a random higher time frame, right? I'm not looking at a 5-minute high time frame or a 15-minute or a 30-minute or a 1 hour. I'm looking at a 17-minute. So you can dial this in to some really accurate levels. So here it is, almost a 60-minute chart, which would be a 1 hour chart, right? This is the 1 hour moving average roughly. Right? So now if you simply take this and change the length, I want to know what's happening with a, I don't know, how about an 18-period moving average? How about that? There you go. And it will adjust both of them. It's giving you the 18-period, right? 18-period high time frame moving average of a 54-minute chart. So you always know what your settings were when you set them up. So this is a really cool tool for you guys. It is the ZLMTF by Coffee Shop Crypto. Just go in and add it to your chart. Hope you guys enjoy this one. It's going to be a lot of fun to use this. And yeah, make sure you boost it. I like this one. It's a lot of fun. Bollinger Band people, support and resistance people, really good for you guys. So I'll see you guys next time at the coffee shop.